The Zacks rank, value, momentum, growth, and income all factor into Zacks rank buys.
Welcome, everyone, to another edition of Zacks Rank Buy. I am Brian Bolin, and I am the aggressive growth stock strategist here at Zacks, and I've got two more stocks for your aggressive growth stock radar. Let's just jump right to it. The first one is Harsco, and that's HSC as your ticker. It is an industrial services company. We, of course, have a Zacks rank number 1, and that makes it a strong buy, as basically all of these videos do. And it has the A for growth. Normally, I like to see a big divergence between growth and value, but a C for value is acceptable for me for this stock. So let's take a look at why the stock is a Zacks rank number 1. And we can see that earnings estimates are trickling higher here. For the current quarter, we see them moving up 1 big penny. For next quarter, 2 big pennies. For the full year, 3 big pennies. But next year is where the estimates have really kind of moved up in a big and meaningful way over the last 90 days, moving from $1.35 to $1.40 and then to $1.45. So 2 nickels is a dime. And, you know, one of the things that I like about this name here is a consistent, good size beat. I think last quarter where we only beat by a penny, it wasn't that big of a deal. But, you know, last few reports have all been very large size beats. We see a 17.8% positive earnings surprise average. So that's kind of good to look at. And then if you take a look at the chart here, this is one of these stocks where, you know, a couple of years ago, if you got hip to this idea around $5 a share, you're looking really good. But, you know, things just looking good here. You know, you have your earnings estimates for this year, for next year. They are moving in that direction, and they're taking the stock with it. And you can also see from this chart a whole slew of beats. All these beats. I got to go back all the way to here in 2015 to see a couple misses, and that's when things weren't looking so good for this stock. But things have turned around, and we can expect them to continue to move higher and look better as long as earnings estimates stay moving up, and they have. All right, let's go along to our next one, and this is another play in kind of the same space here. We got North American Construction Group, and that's NOA as the ticker. A lot of rain in the Chicago area last several weeks, so I'm thinking of a different NOA, but still, boy, what a big move here today. We see a 40-cent move that's good for 4.6%. You know, these construction names are really, you know, picking up here. So we have a Zacks rank number 1. It's a strong buy, an A for growth, and an A for value. You know, a lot of people want to see all A's on the report card, but I get an F here. I get an F in momentum, but it's okay. Let's take a look at why this stock is Zacks rank number 1. So we see earnings estimates 90 days ago were calling for this quarter to be a loss. They're now for a gain. So that's what we want to see. We see next quarter moving from 8 to 12 cents. That's a 50% bump. Here's the big number here. 25 cents for the year, moving up to 46 cents. Like that. Analysts aren't so yet convinced on next year, but 50 to 57 is still the move in the direction that we want to see. Let's take a look down here at the earnings surprise. We can see here the most recent quarter was a big one. They were looking for 12 cents as a loss there. Instead, we got a break-even quarter, which is great to see. We're going to call that 100% positive earnings surprise. The quarter before that was a nice beat. We did have that one little miss there. You know, so it's not a perfect record here in the last 4 quarters, but it's pretty good as we see a 35% positive earnings surprise average here. If we look at the chart, as soon as it comes up here, we can see another one of these stocks where it's just been moving in the right direction over the last couple of years. This one, a little bit smaller on your stock price size and on your market cap than the previous name. but we can see that earnings estimates are looking good here, and for the most part, the earnings, we got a miss here and a miss here, but of the last four here, so we got a beat, a beat, a beat, and a miss. So we got three beats of the last four reports, and that's what I like to see in a name like this. Obviously, the stock has been moving higher. I don't think it's too long before this one sees double digits. And that ticker, just to make sure we're on the same page, it's NOA. NOA, North American Construction. Keep that one on your aggressive growth stock radar. That's it for this week. Be sure to join us next time when we take it two more stocks for your aggressive growth stock radar.